Hello traders, it's Ray here, better known as Samurai Trader, and I love day trading. My job is to teach you how to trade the world's best day trading strategies, no matter which market you trade: futures, Forex, or stocks. Now this is session 2, so you may be going from watching session 1 straight into this, but I do need to give a very quick recap for those that are watching this for the first time. First of all, I do need to pull up the disclaimer. There is a risk in trading. Please feel free to pause the video to read the disclaimer. Now you can also, and I'll quickly be showing you this in a moment, the spreadsheets that I use for calculating how quickly you can actually double your account realistically and increase your income. It's so important, traders, that you have a goal in mind and you set, of course it's got to be realistic. That's important. You've got to have the right money management, and I've got a little video where I teach you how to use that calculator, so make sure you download that. Also make sure you subscribe to my channel. Better still, come and join me in my trading classes. You get my entire program for $197. End of ad. Let's get into it. You may remember in video 1 I also mentioned that the maximum risk rule we use is 2%. As I was just showing you in video 1, that in session 1, that trading the 1 tick Renko, I've got a 6 tick stop. When I'm trading with the tick charts, I've got typically around an 8 tick stop, and very quickly $100 a day gets you up to earning 10,000 a week within 44 weeks. So watch session 1 where I go through this in great detail and explain these. You get up to around 300 a day, which is a very realistic target for a trader trading during the New York hours. Okay, look at the income potential within 11 weeks, and remember, you're only adding a contract as you double or increase your account by $6,000. So you may remember, let's jump straight back to the charts. I think, why don't we do that? You may remember we were talking about, as we finished up, let me just get that here for you, about this little long trade. Now this is actually a 2D one. We would have taken, I would have taken at least as a divergence trader, and the reason being I have got divergence right here and over here on my anchor chart. We actually call this a 2D. Now a 2D, and of course it could fail. I mean, we've got a strong downtrend, of course it can fail. My target actually is up here at the cyan line. Now my risk there is 6 ticks, entering on the close of the 4th candle, 1 stop below. All new traders, I really recommend that you do not trade counter trend trades until you are consistently profitable trading with the trend, or trading what we call the wide swings, and more on that as we go along. Now one thing with this trade, this has now been going for a good 10-15 minutes. Now there are a couple of different types of stops that we have. One of those is a fixed stop where it can come down and take me out, but we also have what we call a time-based stop. That is, if you go sideways, something may have changed. We are what we call momentum traders. We want to see the trade moving in our trade direction. Now this one I would stay committed because it has turned into a double bottom. Now remember, my profit, I've got to get past this. That black line of course is our 80-cent level. My target here is the cyan line. Now in breaking the cyan, we are then coming up here to our 200. That will be our next bounce point. Now of course we may go punch straight through it, but we've got a good 85% chance if we break the cyan we will bounce at the 200. Now right now, if I'd have taken this trade down here, and of course I'm not on this live, I would only be up 1 tick. Now we'd be up to, we've got to get past that 80-cent level. Okay, now also once I hit the cyan, which is an 89 EMA, I would then, if it stalls for very long, I would then exit that trade, because these are very powerful reflection points. Okay, so we've actually got 3 of them here. We've got the 80-cent level, we've got the 89, and we've got the 200. And this is once again about taking what the market will give us. We are counter trend. Don't forget what is important, traders, at all times, that when you start your trading day off, and let me just turn that ATR off, it's a bit of a pain there, just get rid of that. We always want to expand our charts just to see what's been happening over the day. Okay, so we can see there that we have been, now this is quite a deep pullback. It's what we call a pivot bounce at this stage. So here we've now formed a little another little double top. The probabilities of my long trade working out are sort of dropping dramatically here with this time it's taking. I would probably, I'm just thinking here, I'll probably stay committed to it. One thing you've got to get really used to is when you go from trading the New York hours across to the Asian session, the Australian hour, the market is so much slower. Now I know we can look at a one tick and say, well, it flies at times, yes. However, a trade can sometimes take a couple of hours. It really can. But let's get back to the main session here, and let's look at our 55 tick chart. Now we can now see my white paint bar is plotted. We've now got a little double bottom there. You've also got one that actually set up on your tick chart. So this is where having one reason to take a trade is okay. Having 3 or 4 or 5 reasons is so much better. And this is where we have both Renko and tick charts will come in and work together. Now remember, this is a CT trade, counter trend trade. It's also on lower time frames. When we trade a low time frame, we've got to remember we also have a lot more noise in the market, a lot more false moves. Okay, that's what you've got to watch with that. So we can see we've got the 50 tick at this stage. There's my anchor, there's my anchor chart 2. What we're now going to do is go to our standard tick chart that we'd be using during the New York session. And let me just scroll right back here. I just want to find a day. I'm just looking at the bottom. Look, let's just start from here. Okay, so what we're looking at, I'm going to do what we call some right hand chart reading for you. Now at this stage you can see and let me just scroll it along a bit further, and I'll expand this chart for you right now. Okay, so we're going to expand this chart, and what you'll notice here is the black lines, the lines that I've put in manually, and I do this every month on every contract where we'll go and put in the round number 0. Very specific things you want to be aware of when you're trading the black gold, okay, such as divergence trades. Now Blind Freddy can see that we've got a beautiful one here. Now what's the difference between, say, this one here, that one there, you've got some diverge, and this one here? Notice here we've got quite a large overshoot past the 50-cent level. Now what that actually does, it makes the trade, it really decreases the probability of that trade. That's a great one, and that is actually what we call a T3. I won't get into that now, but see how price action is separated from the trigger line there, right? That's a really nice T3. But look over this one here, right? See how we're bouncing around at the 80-cent level. So that really qualifies that very nicely. So what we now want to do is start to look at what's happening with price action going from our side, from the right hand side. I'm just making my pointer slightly smaller, traders, because what it does, it stops me from seeing the timestamp on the candle. So can I see it now? Barely see it. Anyway, so the date on this, if you'd ever like to go back and have a look, this is the 3rd of the 5th 2021. So this is at 7:47. Let me just move that out the way. 7:47. So let's just start with this here. So the volume is really starting to pick up. So this is Eastern Standard Time. So first of all, just to show you this here, you had a beautiful little divergence trade just here. And on your higher time frames, because this is a one leg, two leg, three leg up, you'll find you've got divergence on your anchor charts as well. So now price comes down, we form a nice little double bottom, but that's easy to see after the fact, I know. And now we've got a beautiful little double top with divergence. Okay, so we definitely would want to sell that double top. Now this is where it comes in to reading what's happening on the right hand side of the chart. What's important, traders, is that we learn to read the stacking of the EMAs. Very important. And there are two key setups that I mentioned in session 1. It's the 34B and the 2B. Both of them kick butt every day. Right now, because we are looking at the tick, a 233 tick, we would have a stop. Typically we want to try to keep it at around 8 ticks, which is $80. Now during the New York session, I really like, and let me show you this, I like the 4 tick Renko. Okay, so one of the challenges we can have with the 4 tick Renko, and just quickly flick that up, is that if I enter on the close of a third candle, put my stop under here, I've got a $140 stop. So that's the thing, we want to try to keep our stop down as much as possible, but that's another lesson within itself. So let's look at this here. So what am I now waiting for? Okay, so we've just had a really nice trade there. You can see that actually moved down 20 ticks, which is $200. Now as we break this, I want you to notice here, we call this follow the gold. Note the EMAs crossing here, we call that a T20. I'm now looking for a pullback back to the gold over here, and I'm looking for a short trade. My long-term stochastic is down, I'm looking for a short trade, and see that white paint bar just there. Now what that would be, that is a red candle. Now when you're trading, and I know I'll have members watching this, as you know, when you're trading the 34Bs with CL, you can just enter before the super scalper. All right, so let me actually turn it off, it's probably going to be easier. And what that does, traders, is that it means you can enter the trade earlier and you've got a smaller stop. But what you don't want to do with CL is have a stop that's too tight. So see that there, I'd be really entering there, entering that particular trade and putting my stop 1 tick above. Now what is also important, traders, is that I don't enter the trade too early. I don't want to have the candle reverse. So what I'm looking at then is my tick countdown timer here, which will tell me, and remember this right now is on the current, because we are live here, so that's not on this candle here, but of course on what's happening days in advance here. But I want to see it basically close before I enter the trade. Now please remember, traders, if ever you're unsure, say if you have a really deep pullback and it's say a little bit marginal, what you can actually do is wait for the candle to close on your anchor chart 1 as added confirmation. So just here I'm going to have probably about a 5, 6, 7 tick stop, and my target there, I want to really go for a minimum of 8 ticks. Okay, and we can see down here I've got here the 50-cent level, so I've got at least 12 ticks there that I can go down and target. Well, bang, we hit that. Now what am I now waiting for? I've hit that. Notice here we're just breaking through the 200. I'm now looking for another trend trade. Now I've just taken this as a random day, so as I said, this is a week ago. I can't even remember what happened on this day, but what I'm now waiting for is a retracement, and then what we call a trend continuation trade. Now let's just see here, there are two things. If I get a pull back to the 21, I want to have my super scalper plot. If I go back to the 34, I'm quite happy to enter on the red candle on the first candle. Now why is that? I mentioned earlier that a 21B is a lower probability trade. So what I need, traders, is further confirmation on what may happen, or that the trend is continuing at least. Okay, so let's just see what happens. Okay, now just there, oh, I've turned, that's right, I've turned the super scalper off. I'm just thinking, why didn't that plot there? So right there we would actually have the super scalper would have plotted here, and I've got a short trade lined up. Now let's talk targets, because we've already spoken about our entry. I'd have probably about an 8 tick stop there, and by TradeStation's thinking there, and our next level is down here at the 63.20. there we can see it right down there as a major support line. So if you were trading a single contract, I would be recommending you consider exiting at +8. That is, take 8 ticks. You've got an 8 tick stop. Now you can trail, but quite frankly, look, it can be a bit choppy at times. It's nothing more disappointing. You go down and you hit 8 ticks and it comes back and you just get out of break even, really, and you only need 3 or 4 8 tick trades a day, and you're doing really well. And what's so good about that one and that one, look at the fanning of your EMAs. Okay, so here is our target right down here. Now for trailing, by the way, we can be trailing using a whole range of things here. We could be using a parabolic SAR, which stands for stop and reverse. We could be using our ATR stop and flip. You can use the Jake Bernstein 8x8. There's a whole lot of things we can do to be trailing here. Now as we come down to the 20 cent level, you know what we're going to be doing? Pulling our stops. Now that's a good 10-20. That's basically 20 ticks, $200 in that move, but you'd be pulling your stop mighty tight right now. Why? When we get down to the 20 cent and 80 cent, there it is there, we nearly always will get a bounce. Now let me turn the super scalper back on. As always, traders, my videos are raw, real, and unedited. Okay, so if I fluff any, whoops, wrong indicator. That's the rule of one. That's my, let me just turn this off. Sorry, what have I done here? Let me get rid of that. That's what we call the rule of one, which is for Renko only. We don't want to have a rule of one on tick. Ray Super Scope, here we go. There it is there. Okay, so what I'm going to do is say right now, or in a moment, now we've now got a long trade to go long. Why? Remember over here I said to you about having a T3 set up just there. See that you've even got a T3 there, but there's a little challenge with that one. You've shot past the our line, but also note how close you are to the major EMAs. I'm going to give you something which is worth thousands of dollars a year in profits to you, and another little thing that most traders don't know we're trading tick charts. Notice the gapping away from the trigger line here. Note the distance from my entry to the 34 EMA. See that distance there, right? We are 18 ticks away from there. The probability of this going and kissing the 34 when I've got a T3 is probably 90%. Now here I'm going to have an 8 tick stop with a 2-to-1 risk reward. I want to take this long trade. Now my entry would be on the close of the third candle, or 1 tick above that second. So really I'd be in now. Okay, would be taking this trade now. Okay, so up we go, and members, you know what we've got right there? We've got a T20 just there. All right, so now we've come up, and thank you very much. What do I have right now? Okay, so a nice little winner here. Right now I don't have anything. Now this is one thing with tick charts. See this here, you've got a concept that's been around for years. It's called either a money on the floor or a ka-ching trade, or the slingshot. Been around for 50-60 years, those setups. But what you've got to be very careful of, traders, is taking them when you're too far out of your EMAs. Now here we've got a very strong level up above, and you could probably get away with a 6 tick stop. So see that right there. So see how I've got a right here. Oh, and the other thing, sorry, I just realized we've also got the market open. It's 9 a.m. and let me just discuss that about oil. if I'm trading the ES, the NASDAQ, or there's no way known I want to be in personally unless I've got a very large time frame on trading, being at the open. I call it the killing field. We've got members that do trade it and they love the open, but they've got a certain strategy they use. Personally, I don't like the open. However, CL is different. Okay, you can trade the open, no problems on CL. Look at the distance here. Look for distance. Look at the time frame. That's 5 minutes. Okay, that's 1 minute. This one here now that's 3 minutes in. You've got no problems if you're willing to use a market order, by the way. Now, some will say, I don't want to use the market order. I'll get a tick or two of slippage. Well, that's only nickels or dimes when you're picking up 10 tick moves, traders. Okay, so this is why you've got to really go back and test your strategy soundly. But what I've got above, I've got basically, this is a cross between a T10 and a slingshot there. I've got the 80 up there, right? So I'm going to be quite happy to get in there and go for 10 ticks. Okay, oh sorry, no, I was sorry, let me take that for 8 ticks. Sorry, 8 ticks is what I'd be after. All right, well, there it would have hit 10 anyway, but 8 ticks is what I'm after. Now what I'm noticing here, now there's a big difference between this and this, or even over there. See those differences there in the gapping? See that gapping there? But we wait for the super scalper to qualify it. We don't have any gapping. We don't have a T3 right now. So what I'm waiting for here then is going to be a retracement, a pullback. Now what about that one there, the slingshot that we've got right there? You actually had a slingshot there. I look, maybe I might have taken it and scalp, but I'm not really sure. Okay, so look, when you're going back over charts like this, our emotional feelings are totally different. That's why you got to err on the edge of caution. I've got to say, oh yes, I easily took that, but I don't know if I would have. So what am I now waiting for? Now what I'm waiting for is a retracement. I'm waiting for a pullback here. Okay, so yes, I do have some divergence here. Okay, and now I formed a little double top. See my white paper? I've now got a little double top just there. So can we take this, because we've got divergence and a double top? Now let me say this: if we only have divergence on our lowest time frame, which is, we call it a T19. A T19 is where you've only got divergence on this time frame. Okay, it's your lowest probability, and you'll end up with a good 80+% of the time you'll end up with a 34B here. All right, so if we take this trade and it's actually qualified right now, we would want to get out here right there at the 34. Very important you exit, okay, at the 34, because look, it's probably 85% you'll bounce. So let's just say we take it because there's a good 10 ticks down to it. Okay, bang, we'd be wanting to get out now. Okay, or I would be anyway. Okay, so what I've got setting up here is what we call a 34B. However, see how it's leveled out? I'm not interested in taking it until I have what we call the super scalper set up. Super scalper is my white paint bar, and there it is there. Now remember, that would not set up until now. All right, so now I'd be getting it set up and I would be long right now. Okay, and I would have an 8 tick stop. Now let me just tell you something here. If I got in on the, whoops, shivers, sorry, I just want to, on the close of that, that's a close of 94, a low. Now what we've got there is a 10 tick stop, and that's the maximum stretch I would do on and so my stop's not going to be down below here, and this is what you got to be aware of. So if you got in here there, and this is where big candles are what I call evil. So if we got in on the close of that third candle way up there and we set our stop there at that low, that was sorry, that was, so if we got in there, that was a close of 94, a low of 80, that's a 14 tick stop just there alone. All right, so I really want to have that maximum 10 tick stop. Now if I was on Renko, I'd do it, but Renko's another it's another story another time. So let's say I've got a 10 tick stop. Now there would be after a minimum of 10 ticks, we would go to break even probably at +7. Let's just see what we did there. All right, so that closed at 94, high of now that hit actually 9 ticks, so we're well and truly whacking in at least 4 or 5 ticks of profit, and I'll tell you why. Look at the number we're bouncing off. Okay, remember I said to you that we've got to take what the market will give us, meaning it's all great in theory to say let's go for 20 ticks on every move, but when we come up and hit the around numbers, the 80s, the 64s, the 20s and 50s, I can always get back in. I want to get the cash register ringing. In fact, remember when I said 5x5? Yes, I can. That's typical of a 5x5 scalp, just there, and it's not a 2B as well, so that's typical for a scalp. Now what am I now looking for? I'm looking for a retracement and a trend continuation, and there it is right there. Now I want you to look at the difference on the 34 between there and there. Subtle, but makes a huge difference. And this is now 30 minutes into the open. The difference is when you have a sideways market like for 30, it's only marginal, but see how it's sort of going sideways. I want my 3 higher closes. When I'm trending and I get a pullback and a bounce off the 34, I'm willing to enter on the first candle. All right, because I got that trend. Remember, this is a good 80% plus trade. Now I want to take that to the long side, and away we go. Thank you very much. You're good 10 ticks there, and there is another one just there. Now one thing I will say about the candles is this. Remember, we want to close in the upper 1/3, or if we're going short, in the lower 1/3. That is very, very important, traders, that we do that we close in the upper or lower 1/3 of the candle. Now what we'll now do, we're now 27 minutes in, let's just duck over to the 2-tick Renko and have a look at that just for a couple of minutes. Wrong one, let's go to this one. This is what we want to be doing, and let me just make sure that we've got the same spot. Let me just make sure, have I got that on global? Let me just check this. Yep. Okay, so what I want to do is I want to click there, because what I want to do is pull up on the 2-tick. Now the 2-tick, here it is. Oops, I need to actually put some more data here. Let me just quickly do this, and that's why. Let me go back 2 weeks back and do this. Now it's interesting, at times we can comfortably trade oil during New York with a 2-tick Renko, but at times we'll need to use the 4-tick. But what I want to show you here is the difference in the smoothness. Now look at that there. Okay, so look at these beautiful bounces. Now 30, now that's 5 minutes of price action. If you're trading, a little tip for you, if you really want to scalp, you want to wait for the 2B pullbacks to take the scalps. Okay, you want to have a deeper pullback. You don't want to do your 34s. You want to wait for your 2Bs. Okay, because if you're scalping in a fast market, you're going to get more slippage. Now this is a 2-tick Renko. So here we can see, and what I'm saying is that normally New York this time, and that's 7 minutes of price action, we'd normally be using a 4-tick Renko. But the reason you want to, wherever possible, providing it's not going to cost you money, that is, it's just far too fast to be tradable. If you trade with a 2-tick Renko, you're only going to have typically an 8-tick stop if you wait for the paint bar here. If you're just waiting for what we call the rule of 1, you're only going to have a 6-tick stop, which is $60 or $80 compared to if you trade the 4 tick Renko here, your stop is going to be $140. okay, so that can make a big difference on your account size. Okay, so you just want to really watch that. But we love the 2 tick Renkos. Now I'm about to finish this video and we'll go and do another one, but let's just have a look what's happening. Okay, now I think where's that little 1 tick Renko we had where I said I would have gone long? Where are we here? Just over here. And let me do the same thing here, just drag that way over here. I think gee, we've really had some price movement. Where were we up? I'm just trying to think. We had that little double bottom 21. I think we're way back here, so we can see the last 10 minutes has been a lot of price. Here it is here. Remember I said over here I would have gone long, and then time is against us. Then it turned into a 34, a 21, a 21, a 34. Now this is all in over 6 minutes. Here there's your classic pivot bounce. That's all in 8-10 minutes there. Now don't be fooled by these little I call them step downs. Each one of those is worth $10. okay, each step. So to pick up your $200 you can do really well. Now when the market picks up like this, this is where you want to expand what's happening on your higher time frame, because that will smooth that out. But anyway, let me finish this one up, and we'll see about doing another video here. And just look at let's just look at this before I do. 31 minutes into this, what I just wanted to show you was here was the tick chart. So here I've got a 50 tick chart. See the difference here on the 50 compared to the 2 tick Renko. See, you've got an entry there. That's called a rule of 1, by the way. You've got an entry here, entry here, entry here. Now quite often you don't have those entries in a fast moving market, but your tick charts will give you a lot of what we call slingshot trades on the way down. Now in closing on this, traders that say these strategies don't work are just lazy traders. They're just lazy. They are not willing to put the time in. What you're looking for is this, traders, a fanning of the EMAs. Trend trading here, you would have already wrapped up your day here, and this is just a random day today. Okay, and by the way, this is a 2B after major divergence, and let me just quickly explain this. A 2B after major divergence, see your divergence there and divergence here, is a lower probability trade, because a lot of these will turn into what we call an A, B, C. Note the angulation here. Angulation, traders, is when price is angling away and you've got separate, and sorry, you don't actually have a trade entry yet. See how you don't have 3 lower closes yet? 1, that's a red candle, that white one. 2, you've got to have 3 lower closes. But what I'm saying here, note how the EMAs are angling away from each other. That's called angulation. Bill Williams from Profittunity is really that's where I really got the term from. Okay, and this is where these little black dots, these are your fractals. So how would we use a fractal in this case for confirming that turn? Well, let me show you, traders. Let me give you this. Now there's a fractal there. So this is what Bill would do. He'd draw out a horizontal line, you'd take these highs, and he would put a buy stop in 1 tick above. You've now got a trade entry over here, by the way, just there. Just be aware this may come down. All right, 8 ticks is you hit 8 ticks pretty quick, but this could also turn into an ABC. All right, but see here, you've got another fractal. You draw a horizontal line in, you've got another fractal 1 tick above. You're always going for your most recent one there, but now my most recent fractal is right there. There was my long, and that's what we call a fractal break. confirming your new trade direction. Now, what is important, you want to see a close above the 21 EMA. In fact, what Bill, he uses a different setting. He's got an offset moving average. He would call it the gator teeth, the teeth of the gator, just there. Well, the 21 models it very closely, not exact. So you're looking for the close. Now, one tick above, finally you are stopped in to that long trade. Where would your stop go? Just below that little swing low, just there. You could use a tighter stop. You could actually be down here under the 21. See what I mean here about this little trade here, that it could turn into an ABC. What you've got to be aware of when you've got major angulation, look at that there, and major divergence there and there, these are a much lower probability trend continuation trade. So traders, become a member. Come and join me. Make sure you get my calculator. You can excuse me, download my free training manual. Even better still, go and visit I'm a Day Trader, become a member. And what I also include, traders, is 8 2-hour coaching sessions as a bonus at the moment I've got going, where you can attend my group coaching sessions, which I run every Tuesday and Wednesday evening, 6 p.m. to 8 p.m. Central Standard Time. If you can't attend, it's because we've got members from all around the world. Just one moment. If you can't attend those sessions, you can watch the recordings and you have lifetime access to the recordings. But go and visit my website, become a member. Thanks traders, see you on my next video.